Hindustan Aeronautics will be listing on the exchanges today. Now, the company had raised close to 4,088 crore rupees and had issued shares at the lower end of the price band, that is 1,215. Now, the IPO was just subscribed with the total subscription coming at 0.99 times, with most of the demand coming in from the QIB portion that was subscribed nearly 1.73 times. Now, from this QIB portion, LIC was the major buyer. Now, the government-owned insurance company bought 7% stake in Hindustan Aeronautics. Now, the total issue size of Hindustan Aeronautics was close to 4,088 crore rupees, of which LIC subscribed for 2,844 crore rupees of shares. That is close to 70% of the offer. Now, the street is expecting the shares to list at flat. Let's see how the valuations would stack up. At the issue price of 1,215, the market capitalization would be close to 40,600 crore rupees. FY17 price to earnings would be 15.5. Market cap to sales would be 2.3 and EV to EBITDA would be 8.9. Now, if the shares list at a discount of 50 rupees, then the market capitalization would be close to 39,000 crore rupees. Price to earnings would be 14.8, market cap to sales 2.2, and EV to EBITDA would be 8.4. Now, if it lists at a premium of 50 rupees, then the market capitalization would cross 42,000 crore rupees. Price to earnings would be 16.1, market cap to sales would be 2.4, and EV to EBITDA would be 9.4. Now, if you say Hindustan Aeronautics is not only the largest government-owned defense company, but it is also the 39th largest aerospace company in the world. Now, the order book of the company is close to 68,400 crore rupees, which gives a good revenue visibility for the next 3 years. Now, apart from this, the company also has extra orders, has submitted proposal for aircrafts and helicopters, which are worth around 64,500 crore rupees. Now, it's a Navratna status company with 5 manufacturing units located across India. Now, the company is not only manufactures but also designs, develops and repairs aircrafts, helicopters and aero engines. Now, over the years, the company's major client is the Indian Armed Forces, but the company has also exported to countries like Nepal, Afghanistan, Maldives and Mauritius, but exports still form a very small part of its total revenue. Now, the company has been generating majority part of its revenue from sale of products, but if you see over the years, the share of service revenue has been increasing from 21% in FY15. It has now increased to 40% for the first half of financial year 2018. Now, the company does not have any peers in India. So if you see the financials of the company's revenue, net profit and EBITDA grew at a compounded annual growth rate of 7%, 63% and 26% over FY15 to FY17. Now, the reason behind such a high growth for net profit and EBITDA is because there was a significant drop in provisions, tax expense and a small drop in the raw material cost. On the balance sheet side, if you see, the company is a debt-free company with a total cash of more than 11,600 crore rupees on its books. The book value per share of the company is close to 387 rupees and the cash value per share is 350 rupees per share. Lastly, in the return ratio side, the return on equity for FY17 was close to 21%, return on capital employed was 10% and return on asset was 5% for the financial year 2017.